Larry Shover, Chief Investment Officer at SFG Alternatives, joins us now live from Chicago. Larry, good to have you with us today. There's been a huge amount of fluctuation and volatility through that session. I note that the Dow Jones was trying to make a recovery from the heavy sell-off that we saw yesterday. It did move into positive territory. It's now back down again. What have you made of the trading session today on Wall Street?
Yeah, well, I think it's overly gloomy, the sentiment is. And, you know, I think the post-election rally just failed to hold. And I think with that, people just got really nervous, looking a lot more at headlines than they are fundamentals. And right now, like the S&P 500 value proposition being down where we're trading right here is solid. But people also realize that the ceiling isn't that high from now until we see more iteration from whether it's tariffs going on with China, whether it be the slew of economic numbers coming out, et cetera. I think people might be thinking we're going to wait for that, and sentiment continues to be dour.
When we look at the volatility index, the so-called VIX volatility index, or that fear gauge on Wall Street, this really paints the picture just to the moves that we have seen over the last quarter. I think we've seen the VIX index up more than 68%, and probably even on top of that, given those moves today. Do you expect that we will continue to see more volatility as we head into the end of the year?
You know, I don't. I think there's so many catalysts, and all we need is one or two of them to play out. Even with trade tariffs, I mean, I, for one, don't think there's going to be a resolution right away, but maybe they'll agree to a framework, something to push it off, but anything to provide some solace to investors and traders around the globe. Because right now there is none, and there's so many moving pieces and what ifs that's just keeping people on the sidelines, hence the volatility. But I do believe that the volatility will come back, mean revert as it always does, to the end of the year.
Can I ask you about the oil price, because that was a big move again through the session today, keeping those energy stocks under pressure. 12 consecutive days of losses now. This is quite an historic move that we've seen for the oil price, despite, you know, renewed efforts by OPEC and its allies to put a floor under the oil price. How much further can we go lower from here? What do you think sentiment is like? What's that telling us, I guess, about the outlook, particularly for global growth?
Yeah, well, as you know, I've been bearish on oil all year, and it's been hurt all year, finally getting it right, but still, it's been a long year. That said, I do expect a short-term bounce for no other reason than global refinery season is here, talking about 1 to 3 million barrels a day being taken offline over the next 2 to 6 weeks. Consider also that financial liquidation has basically taken place from the beginning of October until now. There's so much hedging, so much trading and liquidation taking place. It's hard to see a value proposition of getting short right here. And also, at least in North America, we're having a colder than normal start to winter. That should add demand for middle distillates. So I do see a short-term bounce, but the long-term issues have not been fixed. So I still believe oil will remain in the low 50s, throughout the near-term future, 1 to 2 years scenario.
I guess there's a lot of factors at play here, being at OPEC and its allies, obviously the supply cuts, not to mention the trade war situation still ongoing between the US and China. Note that you did mention it earlier, but some pretty positive comments from Larry Kudlow today about those trade talks coming together between the US and China. What did you make of that? It seemed to, I guess, when we get any sort of positive developments on this, it does impact the equity market. What do you think? What do you think of the possible scenarios as we head into that summit later this month?
Yeah, so it was definitely reassuring to hear that come across the tape today. But when you read it, there is nothing new, nothing that we didn't already know. So I think the market just took a quick moment to get relaxed. But the fact is, I don't think we're anywhere near being close between striking a deal with China. And I wouldn't be surprised to see even more tariffs be imposed. But I think a victory that we might see is a framework to work upon. And I think that's what we're missing. So I think the market might be in for a disappointment, because I don't think we're going to see anything anytime soon. And I think that's what we're seeing behind us. That's what we're seeing with the stock market, why people are so gloomy. I think the market knows that it's going to take a while for that to get hammered out.
All right, fantastic, Larry Shover. Appreciate your analysis with us today as always. Thank you so much for joining us.